With the Nigerian economy gradually opening up due to more market-oriented policies, the country has sustained its bullish position in the equities markets and is increasingly becoming an attractive investment destination to many foreign and local portfolio investors. Cardinalstone was a huge beneficiary of positive investor sentiment in 2023 as it closed out as the number one securities trading firm on the exchange, having traded over 400 billion naira worth of trades on the exchange, and it's a position we've held 2 years in a row. Banking earnings saw new highs in H1 and Q3 2023 due to the implementation of pro-market reforms and proactive net long dollar positions across the space. The Apex Bank has communicated plans to keep monetary policy tight to rein in inflation and to stabilize the naira. These monetary policy initiatives and bold reforms on the fiscal front, such as removal of the subsidies on PMS, serve as a compelling backdrop for our discussions today. This conclave of economic and business thought leaders is strategically timed as companies are setting the tone for their strategic objectives and initiatives for 2024. Our primary objective is to facilitate insightful discussions and provide a platform for addressing pertinent economic developments. We hope that today's engagements will unearth valuable strategies to boost collective progress in Nigeria's ever-changing business landscape. Given these considerations, we have thoughtfully curated a diverse panel of experts who will provide valuable insights into various sectors within the economy. Our event theme, aptly themed Beyond Reforms, Strategizing to Boost Collective Growth, aims to delve deeply into tactical approaches that can propel growth and drive positive change in the Nigerian economy.
Inflation is currently, like I said, the highest point we've seen in 1996, 27-year high, right? And three key things is very important when explaining Nigerian inflation. We try to check an analysis for 30 years, and we discovered that 50% of inflation over the last 30 years in Nigeria can be explained by money supply. Secondly, 25% is attributed to FX devaluation, and then the last is idiosyncratic risks that we cannot attribute to any specific factor to, which is more of diverse factors. Now, money supply currently is at the highest level we've seen on record, and that we think is partly contributing to the elevated numbers that we have. Aside from that, energy costs, inflation, the devaluation all contributed to the rise in inflation that we saw in 2023. 2024, we think that inflation will remain elevated, well above the long run average. But there might be a slight moderation when you compare it to 2023. I would think that this will largely emanate from base effect, basically. Nothing serious, nothing special. While we understand the governments, the monetary authorities are trying to rein in inflation, we think that inflation will remain elevated. They've guided, that's the CBN, that the inflation target for them, they've been having conversation around inflation targeting. They've come to a conclusion that the inflation target for Nigeria is about 21%, about 21.8%, which is close to our own forecast of 22%. Aside from that, they've guided that they will continue to hike interest rates. A report came out recently by Bloomberg this week that the CBN would likely do about 500 basis points, come the February meeting. We think that we are looking at about 100 to 150 basis points for the year, basically, right? And the monetary authority, we like what they are doing at the moment. The fact that they are taking conscious efforts to bring down inflation and as well as to tackle issues like backlog, to attract foreign investors. We like that. So for us, inflation will remain high, 100 to 450 basis points from the monetary authorities. And then on FX, which you think is a big elephant in the room, currency remained pretty much pressured. Last year, we saw almost 50% currency depreciation, the highest that we've seen in a year on record. And in fact, the currency depreciated more than the parallel market. We barely see that, right? And we think that part of this pressure is because of the illiquidity of the FX market. The foreign investors, that didn't come back that were expected. all contributed to this pressure that we saw last year. But 2024 could bring a bit of hope. While we expect currency to remain pressured, while we are forecasting about 1,000 levels by the end of this year, we think that the current account position is suggesting that there is a bit of comfort. One, Nigeria will likely experience improved current account position because we think imports will likely reduce next year. Dangote refinery is coming on board. That should reduce the magnitude of PMS and other oil refined products that we import into the economy, which should help to reduce the outflows of dollars from the economy. Aside from that, we think that the oil production we're expecting to improve, and the still elevated oil prices, cumulatively should support the current account position. So overall, FX will cross 1,000 by the end of the year, while current account position should improve. In terms of foreign influence, do we think that foreign investors will return this year? The CBN has cleared about, I think close to $3 billion in backlog, and they've shown commitment to clearing other backlogs. We think that if they're able to clear all these existing backlogs that we have, and they improve liquidity in the market, we've gotten funds from Afrexim Bank. The Minister for Finance came out recently that Nigeria could enter the Eurobond market, and we are still expecting other line of sight fund. If this can happen and Nigeria can improve FX liquidity and as well as supply, maybe back or close to pre-pandemic level, where we used to do about $3.2 billion on a monthly basis, then we should expect a positive pass-through to the currency and as well as provide a bit of comfort for foreign investors.
I said these reforms impact upon will help to industrialize. How will it help to industrialize the reforms?
The reforms drive more or less catalyzing a lot of opportunities across board. Now you look at the oil and gas reforms, the passage of the petroleum industry bill. I think first they decoupled, you have host communities, you have other sub-components of the bill. And then you also have the subsidy removal, right? Or as some people will argue, maybe partial subsidy removal, but then it's some step to progress or to pro-market initiatives. We think that, for example, could unlock a lot of opportunities across the different spheres of the oil and gas space. Speaking to the downstream space, I think the last analysis we did, trying to compare what is obtainable in markets where you have full liberalization or more complete deregulation relative to countries in like Nigeria, where prices or where there's a regulation essentially. You discover that there's a 200 to 300 basis point difference in terms of margins for downstream business. So when you open up the market and then you allow demand and supply to dictate prices, you get that those within the value chain are likely to be better incentivized, and that would drive a lot of activities. You may see some more downstream players spring into action. Then, of course, aligning or supporting Dangote refinery, right, with policy initiatives to make the environment a bit more friendly, and of course, trying to also push forward the Port Harcourt refinery simultaneously. What that would do is improve competitiveness in the midstream space, which is also very positive, right? And it could also drive further businesses setups, right? Then for upstream, petroleum industry bill, we think it will eventually, drive a lot of positive investments, particularly for offshore. We know that we have a lot of issues onshore, but then offshore, they are relatively safer. So with more clarity, with more accountability, and of course, with issues of host community now coming on to front burner, we think that we may likely see a lot of positive development in that space. We think that all of these could drive positive developments in the oil and gas space.
I think today, the three biggest challenges we face as a country is, number one is security. Security is what is affecting farming, which Mr. Ravindra talked about. Because of security, we can't farm enough to produce a lot of things. The cement and all of that, which you've been able to turn around, right? You have a factory somewhere. It's not a farm. A farm is very expansive. So that is easier to manage. We can produce enough sugar today from imported raw sugar, we then refine. But to produce that raw sugar is the problem. So the number one biggest challenge, and the government is on it. They are not unaware of this. I think the other problems, inflation and foreign exchange. The foreign exchange ties into the inflation because a big part of our inflation is imported inflation. So now dollars is 1.4. I know that my favorite ice cream, Blue Bunny, will be 20-something thousand by tomorrow. How can we solve these two other problems? We heard many aspects of it. These problems, if we take FX, it's a hydra-headed monster. There are many aspects to it. We're talking about food production, so we import less. Have we talked about the dollarization? And it is the people in this room that do that dollarization. So how can we help? What can we do to help in our own little way? A lot of people are making a lot of money today. Again, people in this room, in the stock market, in real estate, and so on and so forth. What are you going to do with those profits? Are you going to change them to dollars and take out of the country? When you do that, you're adding to the problem. You're adding to the problem. So there is something, I don't know if that word exists, but I call it patriotic investing. It is the only country we have. Foreigners will not come and solve it for us, neither will foreign investors. We are too dependent on foreign investments. It will not solve the problem. And I'll give you some examples to buttress that point. Coca-Cola Nigeria Limited, where do you think their profits and dividends go to? They go offshore. They will repatriate everything. Right Foods that produces Biggie, where do you think their profits go to? It will go to the man's hometown in Ijebu, and he will expand his factory. So he will not distort the foreign exchange market. He will not put pressure on the market. Where do you think my dividends go to? When I invest in Nestle and all these companies, where will my dividends go to? We are investing them in Nigeria. But that foreign portfolio investor sitting in London that we are hoping he should bring his dollars, where will his dividend go to? He has to go out. Lafarge versus Dangote Cement versus Bua Cement. Imagine that Dangote Cement and Bua Cement today was the size of Lafarge, and they want to take their dividends out. FX will be moving, we'll be crying. MTN versus Glo. MTN must take their dividend home. We went to ask them for foreign investments, so they must take their dividend home, and we have to provide the dollars for them to take home. So if we Nigerians cannot believe in patriotic investing and start investing our money here, all the money we are making, if we keep dollarizing and taking it out, this problem will never end.